Imagine catching a major breakout before it happens. Moments from now, we reveal how the MTG tribe nailed new swing trade entries into BTC and ETH moments before the explosive surge. Are you ready to see the signals that led to massive profits? This is where trading meets foresight. In today's video, we dive deep into BTC's recent breakout from a 5-week consolidation base and explore its journey to an exciting new 52-week high. We'll dissect the trade setup and the key technical signals that were our green light to buy. We'll also look at where BTC may be headed next, including resistance levels to consider taking profits if you're long. But what if you missed the initial wave? Don't worry, we've got you covered. Stick around to the end of the video where we reveal a potential secondary buy point, your chance to catch the next big move and support zones for potential buy entries. I'm Darren Wagner, founder of Morpheus Trading Group. And with over 20 years of trading experience, I'm here to guide you through these exciting market trends. Now, hit the like button, subscribe, and join the MTG tribe to unlock the secrets behind successful crypto swing trading together. If you're new to crypto trading, the first thing to understand is that the crypto market tends to move in cycles. Understanding where the crypto market is at within any of these cycles is important because the crypto market tends to repeat these historical cycles. Typically, for example, when we enter into a new bull phase, the charge is usually led by Bitcoin, the king of crypto. And when Bitcoin is rallying, often altcoins and Ethereum take a back seat. And when Bitcoin leads the way, Bitcoin eventually takes a rest. That money tends to flow then into Ethereum and some of the larger cap altcoins. And then it filters out into the smaller altcoins, and that's when we start to see leadership as well. And then after that, the altcoins tend to take a break, and then the money rotates back into Bitcoin and rinse and repeat. That cycle we've seen many times since 2013 when we started trading crypto. We've been trading the Morpheus swing trading strategy since 2002 with stocks, and we've been trading with crypto since 2013. If you've been following our channel for a while, you may know that we last traded Bitcoin back on October 17th, when we entered into Bitcoin at a breakout move when it rallied above this high of this resistance channel that it had formed now for several months. And we bought this day, October 17th, when it broke out above this resistance and pulled back. And we held that trade from October 17th all the way until December 4th. And we sold into strength here. And we locked in a 40% average gain on that trade. That was a great Bitcoin swing trade, a little bit of an intermediate term swing trade. And after we got out of Bitcoin, we noticed that, as we tend to see in these cycles, that we started to see a lot of momentum shifting into Ethereum and the altcoin market. So over the past 5 weeks, Bitcoin has been trading sideways in a consolidation phase. This is called consolidation, when the price trades sideways and the price action tightens up. During this consolidation phase, we've been focused primarily on leading altcoins with top relative strength. We've had some big winners like Woo, where we made 66%. And we'll actually be doing some separate videos to walk you through those trades as well. But the main thing to know is that over the past 5 weeks, we've been not trading Bitcoin because it's been in a consolidation phase. We've been focused on the altcoins, but in the back of our minds, we knew that Bitcoin is soon going to potentially break out from its consolidation phase. So we've been keeping an eye on Bitcoin, waiting for the proper entry point. Now, when we enter into a consolidation phase, typically the best consolidations in an uptrend last between 2 to 5 weeks. So typically, if you're in a steady uptrend, which we are, an uptrend meaning higher highs and higher lows and moving averages trending higher like we have here, typically when you see that, and then the price enters into a consolidation, we start to keep an eye on how long it's consolidating, and we look for about a 2 to 5 week consolidation. Now, how do we know when the price action is tightening up and is about ready to break out? Well, at Morpheus, we have 2 trading strategies we primarily use. We buy breakouts from consolidation, and then we buy pullbacks after the breakout. And in this case, we were looking for a potential breakout entry from this consolidation. And the first thing we need to look for is a tightening of the price action. When you enter into consolidation, when you've got these big red candles or big green candles, that's a lot of volatility. And typically, the price is not going to move higher until you see what we call volatility contraction. That's where the price trading range, the distance between the high and the low, tightens up. So you can see here, the first couple of weeks, it was pretty volatile. But over the past week before this breakout, notice how over the holiday week here, how the price action really tightened up. And what we're looking at in particular are these days right here. There was 3 days basically December 29th, 30th, and 31st, where the price action really tightened up. And on December 31st, we had what's called an NR7 day. That's the most narrow range, trading range of the past 7 days. So the distance from the high of the day to the low of the day was the narrowest of the past 7 days. Often when you see these NR7 days appear within a consolidation, and again, keep in mind this consolidation was already 5 weeks long. This is a daily chart. When you get the NR7 day and then you get a tight consolidation, often a rally above the high of that NR7 day is a buy point. And in this case, a move above the high of the NR7 day also correlated to a move above the 3-day high and also back above this 8-day EMA, the green line. Notice how Bitcoin had undercut its 20-day EMA, this blue line, for several days. It held it and held above the 50-day moving average. Most importantly, held above the 50-day EMA the whole time. So when we saw this undercut of the 20-day EMA but holding up, we sent a trade alert to our members of the MTG tribe, and we said that we're looking at buying Bitcoin on a move above the high of the 3 days, right above the 8-day EMA. Specifically, we said we were looking for a potential buy entry on a move above 43,030. So I'll go ahead and mark that here. So this pink horizontal line actually shows you where our buy point was, where we told our members we're getting in. So we bought right above that 3-day high, and momentum just carried on. Notice the volume surged higher. We're always looking for confirmation of higher volume on a breakout, and volume surged to almost double its average daily volume on the breakout day, and followed through the very next day and broke out above its 5-week consolidation to a new 52-week high. And that's often what you see. If you time your entry properly, the best trade should be in the money pretty much right after you enter. If you enter a trade and it goes against you for a while, a day or two before it moves the right way as a swing trade, then maybe your entry wasn't that precise, but sometimes that happens as well. But in this case, we did get a precise entry. Now, when we bought, we always set a protective stop loss in case we're wrong. So when we entered above this 3-day high, we set a protective stop just below the 50-day MA, so that if we're wrong and we break below the swing low and break the 50, we definitely want it to be out. And that gives us a pretty high risk reward because we're clearly defining our risk, and our potential reward is much higher. And, when I was a new trader, I was always taught to buy low and sell high, but I discovered pretty quickly there's a better way, and that is to buy high and sell higher, because momentum trading works. And when you've got a crypto or a stock that's at a new 52-week high, there's a lack of overhead resistance. And resistance is created because people buy at a higher price. And when the price rallies, human psychology is to try to sell just to break even. So that causes resistance and causes price to move lower. But when you've got a breakout to a new 52-week high, there's no recent price action where people were looking to sell. So you've got less resistance and more of a blue sky kind of situation. It doesn't take as much volume to move prices higher. And that's why we're always looking at buying breakouts from consolidation to a new 52-week high. Now, keep in mind that buying a breakout from consolidation is different than just buying a breakout that's moving up. Like, for example, we wouldn't chase the price. If we miss the breakout, we don't chase it as it's moving up. In a case like that, we would wait for the pullback, or else we pass it by and look for another trade. But a big key is patience and discipline. Follow the trading strategy, follow the setup, and don't chase the price action. Since our buy entry 2 days ago, Bitcoin is currently showing a 5% gain for the MTG tribe since our buy signal. So where do we look to sell and take profits? Well, if we're approaching a resistance level, we typically tend to sell into strength to lock in gains. But if we're at a new 52-week high, we tend to use trailing stops more to try to maximize the profits, basically riding up the uptrend as long as it remains intact and as long as the price action remains bullish. So we do have an approximate target in mind, though we got to keep in mind here with some resistance. And for that, we have to look at the weekly chart. We got to zoom out and go back further to see where we might find resistance on the weekly chart. So this is a weekly chart. Each bar you're looking at here is 1 week of price action. And the area I want to call your attention to is back here in 2022, basically March and April of 2022. This congestion band here may act as a bit of resistance. Specifically, we can draw some horizontal lines here. The high of this move here, which is right around 48,000. This is going to be some resistance here. Okay, so based upon this resistance level around 48,000 and the price currently being at 45,000, we've got about 3,000 more points that we're looking for here, about 7% more. So we've got about a 12% profit target on this BTC swing trade before we'll look to take some profits. Although if the price action rallies up and then starts to consolidate, then we'll probably just trail our stop higher and continue to hold. In terms of trailing our stop, We typically will trail our stop below the 20-day EMA plus some wiggle room. But after a breakout, we initially will trail the stop below the 8-day EMA until the price action confirms it's moving higher. Now stick around to the end of the video here, and I'm going to show you, if you missed our initial buy point, where you might consider a secondary buy point into Bitcoin with relatively low risk. By the way, before we wrap up with Bitcoin, there's one other indicator you want to keep an eye on when you're trying to time your trades with Bitcoin, and that is the Bitcoin Dominance Index, BTC.D. The Bitcoin Dominance Index basically shows what percentage of the total crypto market cap is going into Bitcoin itself. So as this index is trending higher, it indicates a higher percentage of total crypto market cap flowing into Bitcoin. When this index is trending lower, it means more funds are rotating out of Bitcoin and into the altcoin market. Now, this is a weekly chart, so you can see throughout 2023, the Bitcoin Dominance Index has been trending steadily higher, which makes sense because we're seeing more funds rotate into Bitcoin. Now, what we did notice, though, is that about a month ago, Bitcoin stalled after failing to break above the 54 level, the Bitcoin Dominance Index, rather, and started to pull back. And last week, we undercut this 20-week EMA, came into support of this prior breakout. And when we saw this undercut of this 20-week EMA and at the prior support level, this told us that Bitcoin Dominance Index may start heading back up again soon, which means that funds would start rotating back into Bitcoin. So this was not the main signal that we looked at, but it was a confirming indicator with the actual trade setup that we saw. So it's just one more tool you can put in your arsenal to help time your swing trades into Bitcoin. All right, next up, let's take a look at Ethereum. I mentioned that when we bought Bitcoin 2 days ago, we also told members we were buying Ethereum as well. Now, why did we buy Ethereum? Because we can see that the relative strength is in Bitcoin, whereas Bitcoin broke out above its consolidation to a new high, Ethereum had not, but we bought Ethereum regardless. Well, typically when Bitcoin takes a rest, the funds will rotate into Ethereum. And what we really like about Ethereum is the actual weekly chart pattern. So in terms of our buy point, it's very similar. Just like with Bitcoin, we bought Ethereum when the price moved above the high of that tight 2-day range, back above the 8-day EMA. But what we really like about Ethereum is the weekly chart. So Ethereum recently broke out above major horizontal resistance. Based on this horizontal line you can see here, we broke out above the April 2023 highs back in late November. See how we broke out above that level. Now, technical analysis states that a prior level of resistance becomes the new support after the resistance is broken. And that's exactly what happened. After we broke out above that level, we came down 2 weeks ago and held perfectly at support, which also showed confluence with the rising 8-week moving average. So notice how Ethereum proved its support level, broke out, came back, held perfectly that breakout level. And because it held that breakout level, we were looking for another leg higher in Ethereum. And that was our relatively low risk buy point rather than chasing a potential breakout. So although Ethereum is kind of pausing right now, we do like this weekly chart, which shows the potential for further gains and a potential breakout above the consolidation soon. In addition to Bitcoin, we're currently in several positions in the altcoin market that are showing top relative strength. And if you're a member of the MTG Crypto Tribe, you should check the chat room for updates to our portfolio. Now, as promised, let's dive into Bitcoin and take a look at where you might consider buying if you missed our initial buy point. All right, well, based upon the same rationale that we just told you about Ethereum, a prior resistance level becomes new support after the resistance is broken. So that means that this breakout level of 44,700 should now act as support on a pullback. And this is the daily time frame, but if we zoom into the 4-hour chart and take a look, we can see that's exactly what happened. Here's this horizontal line where we broke out, and just earlier today, we got a pullback right to that 44,700 mark. Notice how the price just barely dipped below that and then perfectly held right at that 44,700 mark. Also where the rising 8-period moving average is also providing support. So if you missed our entry, any pullback to this 44,700 area or close to it could provide a secondary buy point. Just be sure to keep your stop in place. You want to have your stop, not much lower than, say, around the 42,000 mark, because if you're getting an entry here, you wouldn't want to see the price fail the breakout. So keep that in mind as well. You may also want to reduce your position size because you're buying a pullback to the breakout as well. If you enjoyed this video, don't forget to like and subscribe to ensure that you receive more great content like this. And head on over to morpheustrading.com to find out more about our premier crypto swing trading services. Click on Crypto Picks to start receiving our top trade alerts with our exact entries and exits of the top crypto swing trade setups. Remember to trade what you see, not what you think, and we'll see you back here in our next video.